Hey, good afternoon, everyone. Trader Tim from eMiniMind.com. Today is Monday, October 15th, doing a market analysis video on the E-mini S&P to kind of get this week started. We're going to keep it short and sweet today, and I wanted to talk about a couple of reasons why I feel like the sell-off is not um, anything to really worry about long term. The first thing we have here on the weekly chart, if we look at the sell-off from January, we're all we've done is pulled back halfway, and we're kind of back into this the middle of this range. You can see, this channel that I had drawn easily broke that to the downside, but we're sitting now in the 50% retracement long. We've had a pause here, so this next week or two, I'd expect to bounce and working our way up to 28, 29, 25s. Even if the market's going to go lower, you get these bounces in, um, even in a bear market. If we look back here in January, we had two solid weeks down, and then we had that bounce, then we got that another leg down. And so you reach a point where there's no more sellers, and we've kind of come upon that the last couple of days. If I go back to the daily chart, you can see here how we've, oops, not 4 hour, daily. You can see how we've been inside that big body day from Thursday and holding on top of the 50% retracement. Look at this tail. The tail on Friday came down, tagged the 50% long, and then we rallied into the close. So even though we didn't close positive on the day, I like seeing these bottoming tails down at lows. If we look at some of the daily price action back in January, look at this bottoming tail down here at lows. Another thing that not a lot of people are talking about, if we come over and take a look at, let's do a 2-year weekly chart, and we can see, you know, looking at the chart, we've got pretty strong trend still. If I do a 50 period moving average, all we've done is pulled back to the 50 period weekly moving average here, kind of like we did back January, February. The volume not nearly as high as the January, February pullback. But let's take a look at the VIX. Notice how the spike in the VIX is nowhere close to where we spiked in January, and we didn't even break 30. And so this is a good place to be as a trader, 20 to 30 in the VIX. And as we've seen in the last week and a half, I mean, there's been some 10-point trades that we've had that have transpired over the course of just a couple of minutes in some cases. So really good trading opportunities. And as we look at how the VIX relates to the S&P, you know, nothing to not a very extreme volatility spike. So that's another reason why I'm not super concerned with the pullback longer term. I usually don't put my 2 cents in on the long term economy, but from a technicals perspective, yeah, we're getting sort of a turn down in the moving averages here. But again, January, February, we had that run up. Look at the difference. Straight up, no pullbacks, and versus nice structured rally, pullback. Making a new high, pulling back, making a new high, pulling back. So, do I think this is the all-time high for the next 2, 3 years? Probably not. We've got some good indications that longer term we've got bullishness in just from the economic factors and things like that. But short term this week, looking for a bounce up to 28, 29 a quarter. And so I'll be looking at longs down here at 27.40s and then maybe shorts up here at 28, 29s if we get a clean stop and sell off there. One other thing I wanted to mention is when we have a day like back here on the 8th, we had that hammer put in, sort of a hammer, not officially, but then we broke that candle's high. When that setup fails, because this is a very bullish situation, when we break the high of the lowest bar in the pullback, the high price from the 8th of October, When that high price is broken, as it did on the 9th, that's a very bullish sign. So when that setup fails, you want to look for an extreme in the other direction. And so that's what we had here on the 10th. The setup failed. We broke the low then of that uh, candle, that same signal candle that triggered or signaled, okay, we broke the high of the low bar. When we break that setup and then we break the low of the low bar, you want to look for an extreme to the downside then, and that's basically what happened, and for a lot of different reasons, but it really doesn't matter. So as we head into the week, tomorrow we'll be doing a live trading session, expecting things to continue to be pretty good here in the markets, and I would be a little bit cautious if we stay within today's range. That'd be the third day of getting tighter and tighter and tighter. Um, but a possible scenario is breaking down a little bit, maybe taking out this low and then putting in a bottoming tail hammer where we maybe come down and tag the 61.8 and bounce. Otherwise, if we just go up from here, then 28, 29 is a pretty logical place for us to maybe see some resistance. So I hope everyone has a great week of trading, and no need to get overly concerned. For the day traders out there, this is a great time to be involved in the markets. So have a great week, and we'll talk to you soon.